Well, thank you for joining us on a Monday. I'm Marlon Bowling with you as we keep an eye on your ag commodity trade as we get ready to open up the daytime session to open up our new trading week. And I want to bring in our first guest analyst, RichNelson of Allendale Incorporated in McHenry, Illinois. And Rich, on this Monday morning, as we get ready to open up our daytime session, USDA did have an announcement this morning, and they said that, hey, we sold some corn over the weekend, and here is a look at what the amount was. It was 130,000 tons of corn. It was sold to what they call unknown destinations for the 2017 and 2018 marketing year here. So anyway, another nice, strong amount here of corn sales, at least for the time being. I don't know if that'll end up being supportive to the trade or not. It seems like in the last couple of weeks, every time they announce a sale, it's like a dagger to the market, and that commodity goes down.
That's actually a good point here. So maybe one of the things the trade is looking at is that some of these sales might have been discussed about, and maybe the previous day might be a good discussion point right there. But as far as these corn sales, we do need a few more, like we mentioned, in the next few weeks to really justify USDA's position. As it stands right now, we're probably not too far behind the pace needed for USDA, so we don't think we're going to see that much of a change for exports, at least on Thursday's report coming up here.
Okay, in the overnight trade here, Rich, not a lot going on. We can take a look at the corn market and the soybeans and the wheat here just to get an idea of what did take place overnight. Very quiet. Gosh, how many times have we said that now over the last month? Corn did gain about a penny or so, but once again, it is within just one tick of that 350 mark. That seems to be the magical mark that it's magnetized to. We have the contract in March up a penny and a quarter overnight at 363 and a quarter. On the soybean trade here last night, it looks like we didn't move very far there either. We did have January actually gaining a couple of pennies in the early morning trade here. 988 and three quarters was the last trade that we've seen on the Globex market. Looking at the wheat trade, in Chicago, we had December actually coming back and gaining 3.5 cents overnight. That's interesting. 429 and a quarter. That would be within a couple of ticks of its high of the overnight range. In the Kansas City market here, we have December now trading overnight at 429 and a half. That would be 2 3/4 higher and just one tick from its high of the overnight trade. Only at 2 cent trading range though, so don't get too excited there. Minneapolis wheat, we had December trading about 3 1/4 higher last night at 628. That had roughly about a nickel trading range there. Cotton market overnight, by the way, we had the December contract there down 28 points at 68.44 per pound. All right, Rich, let's talk about this wheat market here for a little bit. Up about 3 cents or so, roughly on average overnight. A little bit of perkiness in the wheat trade. Now, we had some big export sales for hard red winter wheat last week. At the time, it didn't seem to react too much to it, but is that something that is maybe giving some underlying strength here now?
I think it's something that the market certainly is talking about quite a bit right now, actually. And a lot of people wondering if maybe we're seeing some value-based buying, especially with wheat at this last move to new contract lows over those past few days. One thing kind of that might curtail this rebound in wheat a little bit here, though, is this fact that funds have been selling this wheat market for now 4 weeks in a row. In fact, last week's trade from that Tuesday to the Tuesday the 30th saw almost 27,000 contracts of selling on the wheat side. So as far as this goes, I do think we can see some minor trade rebounding in the next few days, but we're probably going to find a little stiff wall of resistance, at least for right now here.
Well, if you look at a wheat chart, I know I was looking at one on Chicago this morning and also on Kansas City, and it's just like for about the past, 2 or 3 months, it's just like just dragging a chain along the ground. It just doesn't do much of anything. So what do you think the future holds here on this wheat trade? What's it going to take to snap it out of this?
You know, I think right now the focus is on this aggressive crop that Russia, as well as many of the other Eastern European countries, have harvested. We are going to have some pretty good competition here these next few months. So as it stands, I think we've got to get some of that supply moved off the market here in the very short term. And also, like I mentioned, I think the U.S. dollar might have an issue as well to speak on this discussion point, too. Some of our key competitors have been seeing some favorable price movement on the currency side. So I think on both ends, the Russian issue as well as the currency side may need some further improvement there.
Okay, Rich, we'll come and talk a little bit about our livestock trade when we come back. Our guest, RichNelson of Allendale Incorporated. Don't go anywhere.